Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for January 15th, 2023. Before I get started, I'm going to warn you, I've been nursing a cold and I cough quite a bit. I've got a cough drop in my mouth. So if it sounds like I've got something in my mouth, I actually do. So just bear with me. I'm going to try to keep this fairly quick and short, but I've got a lot to cover today. It's going to be a really busy week. Next week, you thought it was going to be a busy week last week, which it was. It was explosive, and there's even more in store this week. And so we got a lot of work to do. So before I get started, let me just say that if you have not taken advantage of the pricing discount that we do every year for the last 7 years around this time, take advantage of it because it only comes around a couple of times a year. We do them around a holiday sometimes and always at the beginning of the year. So make sure you take advantage of it. It is buy 1 month, get 1 month free. So basically 50% off for 2 months. A semi-annual plan, you get 30% discount, and an annual plan, you get a 40% discount. So take advantage of that while it's here. Make sure you download the mobile app as well. I was talking to a group out in San Diego, and I was just making sure that they all use the mobile app because even over the weekends, we do updates. Like, for example, earlier, I wanted to update everybody on what was happening with crypto. So if you have the mobile app, well, first of all, you've already known that we were very bullish on the crypto market and on basic technical analysis all week. You can go through the analysis and say that Bitcoin is challenging, and we're looking to trade up to resistance every day. We're like, it keeps moving higher. We're breaking higher. You can see that we are targeting near the 20,000 level, 19,520 next. And then you can see we actually rallied past 20K, squeezed everybody, anybody who was trying to chase it. Now the problem is that we're getting a little overbought. Relative strength is divergent. You can see we're nearing the 261% extension of the last leg. That becomes now a little bit more problematic for bulls. Ethereum is a very similar situation. We've been bullish Ethereum, looking for the first target of 1400, excuse me. And you can see that we've updated. We've been noting that we broke a descending trend line. Now any dip back to 1400 should actually offer support, but we're trying to work off some very overbought conditions. Just keep that in mind if you're using or you're trading crypto. But there's a whole lot that goes along with this move in crypto and the move in risk that we need to be very cognizant of. So just remember, download the mobile app so you're getting those updates as they come. Whether it's a breach of support and resistance, or it's a move, a new update via the mobile app. You can get it there. And also make sure you join our chat room. We have one of the most active chat rooms on the face of the planet, I would say. And if you look, we just added a new room for the S&P indices chat room, S&P and other markets as well. Basically your stock indices. We have a news and research room. We have the trades room where you can see what people like myself, excuse me for coughing, what I'm buying and selling specifically, but not just myself, other traders in the community. And make sure you check out, just all the other chat rooms that we have, and you can get to that right in the Forex Analytics app. You'll notice right next to your name, you're going to see the go to chat room button right in the upper right hand corner of the screen. Okay, like I said, I'm going to do some fairly quick analysis today, but we got so much ground to cover. So let's start off with what is happening in the dollar. We closed the week and the dollar closed at its lows. Last time we talked about last week, excuse me, when we talked about the euro, we talked about very shallow retracements. And guess what? We didn't get past that 24% retracement. Like I said last week, we're probably going to end up surging to new highs, and we did. So now the question is, how far can we go? I mean, because if I'm drawing a fib, I can't drop from here. Well, I could, but I'm not certain that this is a high. So what I'm going to have to do is I'm going to have to look at this whole leg lower. have to look from this whole leg lower and actually draw a fib from the top of the move to the lower end of the move, and then realize that we are coming into that 50% retracement. I think we talked about this last week. I know I've talked about it on the live analysis throughout the course of the week. That resistance is going to be 109.50. That is within the parameters of completing, these flag patterns between this smaller flag and the bigger flag. So the bigger flag pattern could reach a little bit higher, but I'm going to stop here and I want to talk a little bit about why this is a risk. Because at the end of the week, the dollar went out on its lows. If you look at like the daily sentiment index of the dollar index, it came in at 19, which is fairly bearish, extreme bearish sentiment. So now that you're getting to extreme bearish sentiment, you've got to be a little bit more careful. But it's not just the dollar, which I'm going to go back to the dollar. I'm going to be coming back and forth between the two. But I also want to talk about gold, because gold's relative strength also came in at 92 at the end of the week. Now that is very extreme bullish. Now what you're going to notice here, we talked about gold last week. Remember, I'm going to delete this, but I'm going to put it back. Remember last week we talked about this ascending wedge, and I said you cannot rule out a move higher. The chances were smaller or less that we'd break higher, but if we did, it was probably going to be forming more of a channel, which that's what it looks like it's doing. But notice where the channel resistance comes in at. It comes in at 1930, roughly the 161% extension of this last leg lower, which makes it that much more important. So if you're a gold bull, you got to be careful, because you got the dollar that is extreme sentiment, bearish sentiment. You've got gold, which is an extreme bullish sentiment, which is at risk of can we get a reversal? Maybe. Can we get at least a consolidation? That is probably more like it. Do I think that gold's bullish trend is finished? No, but could we at least consolidate, maybe pull back slightly? Could we see a potential move of us dropping back down towards the mid 1800s before surging higher again? I think that is really quite likely. But again, you have gold, you have the dollar. What else is at extremes? Well, what else is at extremes is volatility. So let's take a really quick look at the VIX. And once again, you're going to have to excuse me, because we've had already a couple edit points, and you may not see it, but I've had to stop, cough, and then continue on. But that doesn't really matter right now. I'm just trying to get through this. What you'll notice is volatility broke through some lows. We broke down out of this triangle, but volatility also is at 10 on the daily sentiment index, which is also extreme bearishness. So that does risk that we could put in a false breakdown sometime early next week. So be careful, because there is, whether you like it or not, there's a ton of support down here in volatility. There is. And I know, when volatility is dropping, the first thing you want to do is you want to buy risk. You want to buy stocks. You want to buy things like that. Just keep in mind that the sentiment is at an extreme. I am expecting turnarounds in all the major markets next week. So let me say that again. I am expecting major turnarounds in all the markets this next week. What could prompt that? Well, going back to the dollar, let's talk about the US dollar, Japanese yen. Do you know what is on the horizon Wednesday morning in Japan, Tuesday evening in the US? The Bank of Japan. There's a lot of speculation that the BOJ is going to be tweaking its yield curve control, and notice how the yen closed below a long-term 618 retracement. But before you get too bearish, and just so you all know, I am short the dollar yen currently, but I don't plan on being short as we start off the next week because of all these extremes. But let me tell you, in with the Bank of Japan, I've said all year that I'm extremely bullish the yen, but after this big of a move lower since the beginning of the year, I am getting a little nervous chasing it lower. Doesn't mean that it can't drop down towards 120. I'm not going to say that. But what I am going to say is we are now approaching some pretty critical levels of support in the dollar yen. So if you look at the previous highs, which come in around 126, you also have this previous low right over here, right around 126. And notice that we're at 128 right now, just slightly below that. And relative strength would be divergent if we stopped here or stopped around here and bounced. If we did this, we probably would not reach new lows in relative strength, which would make it divergent, which by technical analysis standards would say that we are ready for a bounce. If you look at the yen is not extreme sentiment just yet. It's registering in the high 70s, but that's not extreme. But that doesn't mean it can't get there coming into the BOJ this week. So when you have the Bank of Japan this week, you have inflation data coming in out of the UK. You've got PPI data coming out of the US. We are getting towards some risk of a possible reversal this week. And with all the extremes and showing you exactly where all the markets are at, I am expecting at least a bounce, reversal, consolidation, some sort of pivot this week. And I'm not talking about a Fed pivot either. All right, let's take a look at the dollar index. Now, I want to focus on the fact that the dollar index is below a big long-term ascending trend line that has been established since early, or May, I think it is, May of 2021. We are below that trend line, but we're also below the COVID lockdown spike highs that we had following the COVID lockdown. So we're below that level, but we're also at 161% extension, and you guys know that's called the golden Fibonacci, which is pivotal in my technical analysis. By the way, Canada's got CPI too. I just was thinking about that as I was speaking. We have 161% extension that we are currently holding at 102. I would not be surprised if this 102 level, right around 102, above and below it by 20 or 30 points in the dollar index, becomes pretty critical support as we go into next week. So there's a lot happening this next week. As far as central banks go, we do have the BOJ, so we have the yen. We also have the yen to deal with. We also have the Norges central bank that will also be meeting next week as well. And the US dollar Norwegian krona, by the way, I think is boxed in a really, really tight range at the moment. But the risk is that the US dollar Norwegian krona could really, make a decent move here. So there's just something to think about if you guys trade some of these Nordic currencies. Like, I love trading the US dollar Norwegian krona. It's like one of my favorites, but just let you all know that that's happening. Also, out of Australia, we do have a jobs report. Now, let's talk about the Aussie for just a second. The Aussie is well above its 200-day moving average. The risk that I think that the Aussie is facing is we have this ascending channel. Let me just show you. And the Aussie dollar is struggling to really make explosive gains. I'm not saying that the Aussie is not moving higher, because it has been. It's been grinding higher all week. But it's also struggling. Every time it makes a new high, it kind of pulls back a little bit. So be careful with the Aussie, with all the potential pivots that we might see in the dollar index, volatility, the currency market, the yen, the Mexican peso, by the way, which I'm going to have to go over here in just 1 second. I'm going to talk about the dollar Mexican peso, and I'm going to also talk about the S&P. But there's a lot of currencies and gold that are very pivotal. Now, before I continue on, let me just mention that today's sponsor is the Trader Funding Program. And next week, I will be filming a video on how I passed my own assessment with the trader funding program, and I'm going to tell you how I did it. Just because I did it a certain way doesn't mean it's the way that you should do it. But I am going to post all the trades. I'm going to post the curve. I was going to actually do it this week, but unfortunately, as you can tell, I've been fighting a cold all week. So I will be filming that next week, and then we're going to have to spiffy it up and do a little bit of editing just to make sure we do all the transitions and it looks pretty. But we'll have that to you here in the next week or two. But make sure you check out the trader funding program, because if you want to know how you could trade our money, because maybe you just don't have access to having $1 million account, or a $500,000 account, or even a $50,000 account, or $25,000 account. If you don't have access to that type of capital, learn how you can trade our money, and then you don't take any of the risk. You keep 75% of the returns, and also you'll be inside the Forex analytics community, finding trade ideas from myself, from other people in the community. You could be, looking in the general chat rooms, finding, good trades to be looking at, different things that people might be trading. It's a wonderful way to not be, trying to trade on your own, but also being able to trade our money and not taking the risk. Because some people have the money, they just don't want to risk it, and I get it. But with this type of volatility, why not take advantage of it with our capital? All right. As I mentioned, I want to talk a little bit about the Mexican peso. As I told you last week, this is my favorite trade going into last week. We are going to eventually break below 19. I am short, just so you all know. You can actually go into the chat room and you could see exactly at what position, at where my entry is on dollar max, which happens to be at 18.8191 on my average, because I've been in and out of the position all week. So I'm short the dollar Mexican peso, and I've been short as it's been breaking down. The question is, how far can we go? We are into the, what I consider pretty key support zone for the dollar mex. And also, if you look at the peso daily sentiment index, the peso is at 92, which is an extreme bullish reading, which is risk at a reversal with other dollar pairs. So I want you to think about that. Last but not least, one of the other things that we need to talk about is we want to talk about the S&P, because the S&P did close at 4,000. We are above the 200-day moving average, but as you all know, there's a lot of resistance up here. Take in account this green line that you see right here. That's previous support. It's still going to act as current resistance. It's a big pivot area. It just happens to coincide with that channel resistance. So because we're in this area between, resistance from back here in December of last year, and you have that pivot, and you have the channel resistance, I'm going to assume between 4,000 and 4120, it's going to be a bit of a struggle. Now, if we break above that, that's going to be very, very bullish. But from a risk reward perspective, if you're looking around at all the pivotal things that may or may not happen in some of the other markets, whether you're talking about gold, whether you're talking about the dollar, whether you're talking about some of the risk currencies like the Mexican peso, we could actually end up seeing a reversal around these levels, around this resistance zone going into the next week. So I know you all have your opinions, whether you think that the market's going to go up, whether it's going to go down. But I will tell you that the S&P at the 4,000 level is a very pivotal level in the markets. And that's something that you should be thinking about as we go into next week. Now, it is Martin Luther King holiday on Monday. We observe that here in the United States. However, we're still going to be broadcasting the Morning Edge, and we're also going to be broadcasting F.A.C.E. And so if you don't know how to get to our free shows, all you have to do is go on our website, down where it says webinars. You'll see the Flow show, the F.A.C.E. show, and then the Morning Edge is actually one of our paid shows. We'll be broadcasting that as well. That's going to be included with your subscription at Forex Analytics. Anyway, I want to thank you all for bearing with me, my voice, my coughing. And hopefully by Monday I'll be good to go. But thank you all. Jump in the comments if you have anything to say about this week's video, and if you have any questions for me, you can jump down in there in those comments as well. Also, give our team a thumbs up for putting this video together over the weekend, and subscribe to our channel so you don't miss any of this exclusive content from Forex Analytics. Thank you all for joining me today. I hope you enjoy the remainder of your weekend.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.